In the prior videos, we've been talking about making sure that all transactions are recorded properly in the correct categories. These categories are called accounts, and an account is a title of how we're going to recognize the increase or the decrease to the category. Normally, accounts are illustrated by what we call a T account. The T account has three components: the title across the top, and then on the left side is called a debit, and on the right side is called a credit. Now, a debit or a credit does not necessarily mean increase or decrease until you look at where that account is in the accounting equation. We use what we call a double entry system in recording transactions into the accounting equation. In the prior videos, we mentioned that if an asset goes up, a liability or stockholders' equity needed to go up, or another asset had to go down. So now what we're saying is that as we recognize the increases and decreases to the accounting equation, we're going to assign a debit or a credit. In other words, which side of the T account it will fall depending upon whether it's an asset, a liability, or stockholders' equity. So for instance, if I was looking here, if debits are greater than credits, the account will have a debit balance. I added the 10,000 to the 8,000 and subtracted the 3,000, so the ending balance is $15,000. If I was adding my debits and credits and a debit of 10,000 but the credit added up to 11,000, the net difference would be a $1,000 credit. So here's how we have to look at assets and liabilities. Notice that an increase to an asset is a debit and a decrease to an asset is a credit. Notice here where it says normal balance. The normal balance is the side of the T account that the transaction will increase the value of that account. So the normal balance for an asset will be a debit, whereas a liability is opposite, being on the other side of the equal sign, and that the normal balance for a liability will be a credit. So notice here when we take a look at stockholders' equity. Stockholders' equity is the super account, and then we have all those sub accounts below stockholders' equity: common stock and retained earnings. So if we look here, stockholders' equity itself, being on the right hand side of the equal sign of our accounting equation, has a normal balance of a credit. Common stock is an increase on the credit side, and so is retained earnings. However, if a dividend increases, ultimately it's going to decrease retained earnings, and it'll also decrease stockholders' equity. So therefore, the normal balance is on the debit side. Expenses are very similar to dividends in that expenses will decrease retained earnings and will also decrease stockholders' equity. So an expense will be normal balance on the debit side, whereas revenues will increase stockholders' equity and retained earnings, so the normal balance will be on the credit side because that matches the super account of stockholders' equity. Just remember the relationships of the various accounts to stockholders' equity. Common stock is an increase to stockholders' equity, and so is retained earnings. However, within retained earnings, revenues will increase retained earnings, but expenses will decrease retained earnings. Also, dividends decrease retained earnings. So that will kind of help you remember which side is the normal balance side. So if you take a look, the normal balance accounts are assets and expenses on the debit side. The normal balance accounts of liabilities, stockholders' equity, and revenues would be on the credit side. This is very important, and you probably need to memorize this because what happens here is a lot of students get confused on which side of the T account the transaction should fall. Which side is the increase side and which side is the decrease side? In your textbook, you should have a picture that looks similar to this, which will show the plus and minus of increase and decrease and which side of the T account those accounts should fall. Please take a moment to make sure that you understand which side of the T account will be the increase and decrease for each of your various accounts that you're working with for the rest of this course.